Welcome back to Squawk Box. You're looking at the Dow, which closed higher for a sixth straight session in a row overnight. Good stronger than expected results from Intel after the market's 7 sessions in the money. Yu-Dee Chang is Principal and Chief Advisor at ACE Investment Strategist. He joins us now live from Washington, D.C. Welcome. Tell us what you make of the earnings so far. Intel, Alcoa, they look like it's not a bad start to the season.
No doubt at all. It's a pretty good start. You know, it's kind of interesting, Karen. I think basically the backward-looking earnings are expected to be pretty good, right? So people are saying what's important is their outlook going forward. But I think there's a little bit of nuances now. People are really keeping a very close eyes, not on the bottom line, but on the sales number, the revenue numbers. I think whichever company comes out with better revenue numbers are actually getting rewarded. In this case, Intel really pretty much blown analyst expectation out of the water on their top line growth.
Yeah. In terms of INTC and chips as well, I mean, a big focus in terms of earnings is, of course, their gross margins. They also blew out 66% now for this year, 2010, versus 64 before. These guys sound like they've got pricing power. So altogether, at least when you look at INTC, does it equal no double dip? What do you think, Yu-Dee?
Well, not necessarily. Remember we talked about this? I was saying that technology sector to me is sort of a heads you win and tail you also win type of sector, right? So if the economy does recover, these corporations with their aging equipment really has to upgrade. In this case, Intel has been a receiver, a good receiver on the good end of that. But if somehow the recession continues with double dips, in that case, these corporations still needs to have better technologies to replace the labor force that they have laid out to be more productive. So either way, technology sector, yeah, absolutely. That's why you could tell from the Intel numbers.
Yu-Dee, is it fair to say that the other big winners out of this earnings season are going to be the companies that have a strong presence globally? I mean, I'm looking at Yum Brands' numbers, and their China business contributed a fair portion to their overall revenue.
Okay, wait, hold on. Before we go continue with the serious stuff, I got to figure this out. Yu-Dee, what do you think, you know? We had a little bit of sound from the CEO saying, look, we're gung-ho for China. That's where the future is. I mean, everybody's saying that. But for Yum Brands, I can figure out KFC fried chicken in China. I can even probably figure out Pizza Hut in China. I cannot figure out Taco Bell in China.
Everybody likes chili. What can you say?
You don't like the Mexican Chinese, huh? There's no such thing. But you know, global, you know, really is the name for the game, right? If you think about it, the world is divided into maybe 5 different pieces. One is Europe, which is pretty much in trouble right now. U.S. is kind of chugging along. Of course, Asia, with the so-called BRIC nations, are still growing. So I think you're right. I think any company with global or international exposure tends to be a little bit more diversified in this time of uncertainty. You know, it's kind of interesting. I was talking to a colleague of mine, and we're just talking. He has, I think, over about 35 years of experience. I've been investing for about 25 years. Good or bad, this has been the most uncertain environment that we've ever seen. So you need to diversify.
Yeah, Marty, you'll be pleased to know that Taco Bell was always the laggard in Australia, so it didn't always resonate.
It didn't translate down there as well.
Hey, Yu-Dee, you're saying all this uncertainty exists, and we can see that as we head into reporting season and as the numbers start to come out. So what do you do strategically now? Do you wait on the sidelines, or is there a risk of being caught out because the numbers so far look so good?
Yeah, I think this. The backward-looking earnings on the S&P 500, people are thinking about it's going to be somewhere around $19.68. That will give a PE of on the S&P right around 15, which is not very low. However, if you look at the growth going forward toward the second quarter of next year, 2011, expected to be about 21.5, that'll give you a PE of about 12.2. So I think it goes back to the story, Karen, if you're short-term investing, well, you can't really play these 1/4 of earnings. If you're being slightly longer term going forward, market is going to be choppy. It's not going to go straight up. However, earning portion of it still says that you could still buy dips and sell rallies. Not easy to do, easier to say, but you got to buy dips. That's the way to do it. And rotate in and out of several and different sectors.
Okay, got to be nimble. Yu-Dee Chang is coming back from Ace Investment Strategist. Still time to get a question and email us at squawk@cnbcasia.com. Don't go away.
You're watching Squawk Box on CNBC. First in business worldwide.